Today we'll discuss how to formulate investing and trading ideas for the long, the mid, and the short term within one single market. And in this tutorial, we're using the S&P. And what we are learning here today is that it can be applied to all the markets. And between Dow Jones, S&P, Russell, and even Nasdaq, for Dow Jones is giving a very confusing signal. Why is it so? Let's explore. Now, according to a CNN report, it says that Dow Jones enjoyed its best month in nearly a half century in October and is up nearly about 3% in November alone. Whereas Nasdaq and many other stocks are still very much in their negative zone for this year. And also, Fed policy is not very encouraging, with their priority is to curb inflation. And how are they going to do that? Is to have higher interest rate extending to next year, then to pause the interest rate so as to revive the economy. Now let's get technical today with some fundamental understanding. We go into technical. So now all these confusing signal, we're going to learn how to derive the long-term, the mid-term, and short-term view. With long-term view using the weekly chart, mid-term view using the daily chart, and short-term view in 15 minutes chart. And I just saw an opportunity in the 15 minutes chart. Let's see if it can work for today. Now, before we get into the topic, let's take some time to read into the disclaimer down here. All right, let's get started. And what we're seeing here, there are three panes: the weekly, daily, and 15 minutes. So for the weekly, we're starting into its long-term view. We're deriving a long-term view using the weekly chart. And there are two rules. It seems like it is a downtrend, and we're going to learn very shortly about this downtrend line and if we can qualify this as a downtrend. Now, there are two rules to chart a downtrend. The first rule is that first we have to find at least three significant peaks. Then after that, rule number two is that we try to connect all these significant peaks and try to find the best fit. Now, I say at least three. If you can find 4 or 5, that's even better. Now let's get started. How to do that is that first we have to find the most significant peaks. Start from somewhere. That's how a study is done. And we try to connect them together. Rule number two, we try to find the best fit. And there's a little bit of false break here, but I will still classify this as generally quite a nice downtrend. At least we find 3 significant peaks. And for that reason, I will qualify as this downtrend line, it is good. I would like to use it. It means that along the timeline, that's what I'm seeing here for S&P, since they have developed into the third peak. And this downtrend line, I will qualify that. And I would reckon that maybe along the timeline, it may try to reach the peak somewhere around here. If it breaks slightly a little bit, it's alright. I'm just going to make some adjustment. And you're going to see some example in the later part with daily or 15 minutes, I hope. And what I'm expecting here is that maybe the trend will continue to develop to something like this. Of course, on the weekly chart, you may also want to confirm with the fundamental development. If the CPI is still at about above 7% progressively, if it is, then I would say that the stock market will still have a lot of headwinds. So that's for the weekly chart perspective, and I'm going to clear this up. Now let's move over to the daily chart right now. And we still remember, when we look into the daily chart, it is for the midterm view. Midterm view, it could be a position trade holding for a few days to a few weeks. Now applying the same rule, and we could see on the daily chart right now, and we could see that the weekly chart downtrend line is here right now. But if I can expand a little bit here, what do you see right now on the daily chart? I could see that daily chart seems like it's forming an uptrend. And we're going to combine the two together, the weekly and the daily chart. And we have to understand the rule of drawing an uptrend line. What the two rules is a reverse of the downtrend line. The two rules of an uptrend line is that number one, we have to find at least 3 significant troughs. Then after that, we connect them together to find the best fit. At least 3. Again, the more the better. Now we're going to start somewhere. We're going to start here, the lowest point, and it seems like there are 2 perfect points but I'm looking for the third. Maybe along the timeline it will develop the third point, but I'm studying right now. So in the whole process about forming ideas is that we spend time to study into the market. And I think I'm going to clear this line. And let me choose another significant trough. This guy seems like a significant trough. And I'm going to connect it together. And okay, maybe I just clear this again. And I'm going to connect. And I kind of like this. If you can see here is that there's one. Maybe I just expand a little bit so you can see a better view of this. Then we could see that it rested 1 point, 1 trough, 2 and third. And immediately I'm seeing here is that this uptrend line, I qualified this uptrend line as good. It means that I will take reference as the market trend along this uptrend line. It meaning that when we look at the weekly chart line, the daily chart line, I'm expecting that the next few days to the next few weeks, remember that this daily chart, likely that the market is going to maybe do a range bound to somewhere around here. Let me just try that again. It's going to do a range bound, perhaps, and go to the top side. There'll be some resistance before it decided to break. Either way, I'm quite satisfied with the view that we have developed so far using the weekly and daily chart. And from the daily chart, we are now at the midpoint, and likely market is going to range bound within the span. Now we're going to look at the 15 minutes chart. We will apply what we have learned so far on the 15 minutes chart. Now if you're using a 15 minutes chart, definitely you are a very short-term trader, trading into the day trade or intraday trade, and perhaps into a very short-term position holding for a day or two. So I always advocate that when we get into trading, we have to understand what you are trading in. What contract are you holding? What are the babies that you're holding overnight or trading within the day? So what we are looking at and what we are deriving or studying into is the E-mini S&P futures. Now I was mindful that when I trade whatever contract, I have to know what's the minimum point movement. The minimum point movement, it states that, or fluctuation, it states that every quarter point it is equal to 1250 US dollars. So I took the liberty to convert it to 1 full point. So basically 1 full point is times 4 of 0.25, you get 1 full point. It is equal to 50 US dollars. And how do I get 50 US dollars? Take 1250 times 4, you get 50 US dollars. So if I'm trading intraday, I have to know what's the 1 point movement, and what about 10 points? So 10 points is equal to 500 US dollars. So at least I know that if 10 points is against me, what is my potential loss? If 10 points is in favor with me, what's my potential profit? So it's 20 points and 30 points. Now let's get started with what we're going to do here on 15 minutes, applying the same techniques. And for more example, I've include more details and example below. So take your time to study through them and see which contract suit you the most. Now let's get started with this 15 minutes chart. And we are going to first find a point. Maybe I find that this is pretty much a significant high within my view. And I'm going to connect them to find at least 3 points. Maybe I would like to adjust them a little bit here. I would decide to use this point because I just saw something here. And this is one significant peak, second and third. Now third, it rested on the neckline. This is good. Yeah, you could see that there was some hairline here. This is at the highest point. Let me just zoom in a little bit here. And the second point, in fact there are two, which I like it a lot, is at the closing price and opening price, and at the closing price. Yeah, so I have 4 points. Yeah, 3 to 4 points. So I will qualify on this 15 minutes perspective that this downtrend line, I qualified that along the timeline which is, I think we have another 4 more hours of trading hours before the session close. I would reckon that for today itself, highly likely, I think the market is going to travel downwards. So you can make your call to short the market. So basically, just now we discussed about 10 point is $500. So at this point, about 960 to 3960 to 3950 on the E-mini S&P futures, that's about $500 if you find that there's a proposition to short around here. But of course, if you find that the contract is a little bit heavy, there's always there's another contract is micro E-mini S&P. So basically the contract size is about 1/10 smaller. So instead of 10 points $500, 10 point is $50. So it's pretty fun, pretty light for most of the traders. So that's the view for 15 minutes chart, and I'm going to combine all of them together. So if you can ask me that on the daily perspective, what do I see, what's the highly likely, and because of the 15 minutes that I derive a view that likely is going to travel downwards. I wouldn't say 100%, but I would say that maybe towards about 60 to 70%. And you know, something about investing and trading is that it is never absolute. That means there's no such thing as 100% certainty. There's always a probability that I believe that about 60 and 70% chance tonight the S&P is going to travel downwards, is more having more headwinds. And because of this 15 minutes, the next few days I believe that the daily chart is going to develop towards the downtrend, touching this support. The objective is around hitting for this support. And in the long term, I think that the market is going to maybe do some range bound, and maybe is going to, or on a weekly perspective, it may, as it range bound, say for example here, it may touch here, and ultimately maybe the CPI got a higher number, the market will start to trend down again. How I apply the same techniques, downtrend line, uptrend line, and applying different time frame to form an opinion. So in short, what's my view? My view for the weekly chart long term is still down, and the daily view is that on the midterm it is maybe a range bound. And for very short term view at the moment today, maybe the next few days or 1 or 2 days, it is heading down very likely. And there's a feature that I kind of like a lot. If you find that what I just shared, it will take a lot of practice. So what you could do is that just ignore all the white line. And there's a feature that I like. Say for example, on this weekly chart, I can just call for a trend. If you can see my cursor, that I just put in a trend, it will suggest all these potential trend. And usually what I do is that I will take reference on it. Sometimes I may find that I may be feeling a little bit tired, and what the system will recommend. So if you find that it's too congested, you can always you can reference to them and see which trend make the most perfect sense to you. But for the time being, I'm just going to clear this out and let you appreciate a little bit better between this 3 time frame. I will have a live session at least once every quarter, and you can find the sign up link below. Also, if you enjoy researching the markets like what I just did with my platform, you can also apply the discount code provided below. We will continue this trading series next week, investing and trading into longevity. Feel free to leave me any comments, and I would love to exchange ideas with you. And for more market insights and tutorials, I hope to see you again very, very, very soon. Thank you for staying true, and you have many great trading weeks ahead.